Will the Fed's hawkish pivot mark the end of the reflation trade? It certainly brought about a drop in risk appetite. This week, we're hoping for clarification on whether or not this shift in sentiment will last. This is the ActivTrades Weekly Outlook, where every Monday we analyze the economic calendar and identify key events, focusing on how they may impact the markets. Stay with us over the next few minutes while I look into how the week is likely to unfold. I will cover a range of topics, including the EU's manufacturing and services data, the Bank of England's rate decision plus meeting minutes, and we'll end our analysis by zooming in on the release of US GDP data for Q1. On Wednesday, Market Economics will publish a preliminary reading for manufacturing and services in the Eurozone. As mentioned, this is only a preliminary reading for the current month. Nevertheless, it is important because it allows policymakers to monitor the levels of confidence in two important sectors for the economy. PMI data, as it is otherwise known, is presented in the form of reports based on the contribution of private sector, manufacturing and services business executives. Results are presented based on questions regarding the improvement, deterioration or no change in confidence levels among the business community. An index is created from the percentages obtained from these inquiries, with a reading above 50 showing improved conditions. The consensus of 58.7% points at an improvement on last month's figures, which, if confirmed, will offer support to the euro. The single currency has been under some pressure over the last week, especially in relation to the dollar, posting its largest weekly loss since March 2020, following the Fed's change of pivot to a more hawkish stance. A strong PMI number, in the current context, is not a game changer, but could offer some support to the single currency. Moving on to Thursday, the Bank of England will be under the spotlight with the publication of the latest interest rate decision, its latest meeting minutes and monetary policy summary. Investors will be watching carefully, looking out for any a la Fed signs of pivoting from the BOE. The pound ended last week in the red versus other major currencies, amidst growing risk aversion in global markets and disappointing retail sales figures for the month of May, which fell 1.4% when the expectation had been for a 1.5% increase. However, the most important UK data published last week was related to inflation, which read at 2% during the month of May, above the expected 1.8%. What the markets now want to know is how the BOE feels about these rising prices and whether there'll be short-term policy shifts in the pipeline. No one expects a change in rates or purchases, but the tone of the statement will be under scrutiny by sterling traders, as a pivot to a more hawkish stance could trigger a pound rally. We'll end our weekly outlook by zooming in on the publication of US GDP data, which comes out on Thursday. Preliminary readings show the American economy to have grown at a rate of 6.4% during the first quarter of the year, with the consensus remaining at that same level. A number surprising to the upside could reinforce the greenback gains recorded last week, when the dollar index rose more than 2%, the most significant weekly climb since March 2020. The markets were blindsided by the Fed's sudden change to a more hawkish stance. The central bank brought forward the timing of the tapering by a year, with the majority of officials now expecting at least 2 hikes in 2023. So, a strong GDP reading this week could help to consolidate a bullish trend for the dollar that may see it breaking through the 93.5 level for the first time this year. This is all for today. I will be back next Monday for another weekly preview. In the meantime, please go to ActivTrades.com for more market analysis. Do subscribe to our channel so we can keep you updated with the latest in the markets. And don't forget to click the like button if you enjoyed the video. Thank you very much for watching.